Good morning, welcome in, and welcome if it's your first time to Everything Money. Often imitated, never duplicated. Here we go. All right, let's see, guys. I know a lot of people watched our Intel video yesterday. Big video for us. So thanks for watching that, and thanks for the feedback on that. I know a lot of us are talking about it this morning. To answer everybody's question, yes, at the end of the video, when I said I bought it, I actually did buy shares of Intel. I have more options, more puts sold down the line, but I saw that price. I wasn't going to pass it up, and this chapstick is empty, so that's going that way. All right, let's go to something else. So GDP growth came in really strong this morning for the United States. Must be all those jobs out there that are just flossing. So GDP growth activity decelerated to 2% annualized rate amid Delta variant and supply concerns. So I'm joking, by the way. I'm joking. The U.S. economy expanded at its slowest clip in over a year in the third quarter, with a reopening surge in activity slowing because of everything that's happening, mostly supply chain issues. GDP quarter over quarter annualized growth 2% versus the 2.6 expected growth. You know, I'm not going to read into all these excuses that they make for everything. We know what the issues are. Literally, if you look at everything in the whole country, it's all bad. It's all declining. Everything is down except for the stock market. So say what you want. Proof is in the pudding, guys. Proof is in the pudding. So, Kevin, email help@everythingmoney.com. Nick will get back to you. All right, let's get further into it. Actually, let me scroll this one, because if I see the title, if I don't see the title, that means I did it. So let's start with Ford. This is exactly why I don't trade. This is why I don't like the earnings, the way that the earnings is structured in this country. First of all, I think it should be on an annualized basis. And secondly, this is how earnings can really throw you off. So Ford here. Ford is up 9 or 10% this morning. And what came in yesterday? Ford stock rose more than 9% after hours Wednesday after the automaker reported mixed third quarter earnings, but raised guidance for next year. So they raised guidance, they resumed their dividend, and they said that chip shortages are easing. Everybody else is saying that chip shortages are not easing. But they raised guidance. So these analysts came out and said, we're going to raise guidance for next year. And the stock price went up 9%. This is why I don't like earnings, because it has nothing to do, in a lot of cases, with the actual earnings of the company. Revenue fell for Ford 5% in the quarter. Ford is making final preparations to launch its F-150, the all-electric F-150 truck. They've taken more than 160,000 reservations. They haven't said how many that they're going to be able to fill. But the point is here, this is why I don't like trading on earnings, because when I say they're a total crapshoot, they are literally a total crapshoot, because you see what's happened right here with earnings, with Ford. They shouldn't, I mean, if you want to base it on numbers of last quarter, they shouldn't be up 9%. The revenues are actually declining. So anyways, Caterpillar, I sent this to the Bid and Ask Nation this morning. Ford found on the road dead. Fix or repair daily. Actually, I do like Ford trucks. Caterpillar profit beats on the construction boom, high commodity prices. So really not too surprising, but I am excited about it because this is a part of the Employed Trader series. Those of you that know, we were about to trade Lockheed Martin. It was looking really good, and then they pooped the bed. So right now, we're good. We're good with this one. We're gonna get a little gap up. Let me just pull this up for you guys real quick. I was pretty excited about it this morning. Caterpillar, and so we're gonna open. So our trend is looking pretty good here. We're gonna gap up. We're gonna open just under the 50-day moving average. I was hoping for a little bit more of a gap, but it helps. Every little bit helps with the chaos that's happening in this market. So construction demand and higher commodity prices boosted sales of heavy equipment. Global supply chain disruptions triggered by the pandemic and inflationary cost pressures have hit the company's earnings in the recent past, with Caterpillar raising equipment prices to offset the impact. Who is typing? Oh, okay. Total sales and revenue rose 25.4%. That's awesome. Good for them. That is awesome. All right, let's go to the next one. Apple reports today. So Apple's going to report later this afternoon. Yes, for those of you that are wondering, Ford is now a tech company, just to let you know. Apple reports this afternoon. Amazon reports this afternoon. So Apple is going to be interesting today. Now, this is the big thing. This is how it's a total crapshoot. We're going to talk about what happened in the third quarter on the earnings call. And then they're going to go forward guidance. And if forward guidance has anything to do with iPhones and how they're coming out very, very slow, and they're not going to make the amount of sales, I shouldn't say sales, the amount of deliveries of iPhone in the fourth quarter, this could be something that hits Apple this afternoon. I'm not saying it's going to happen. I literally have no clue. I have no clue about any earnings. I really don't know. But that is one way that I could see the story spun. We just saw it spun that way with old Ford. So the street estimates for revenue of let's call it $85 billion this afternoon. You know what's crazy? So if you look at this story, Streets calls for a revenue estimate of $84.9 billion for the third quarter. I'm just going to go to this Amazon story real quick. The company said in July it expected third quarter sales to be 106 to 112 billion. Amazon literally sells everything, as we know. Apple sells just all they sell is their own product. They sell iPhones, iPads, computers, headphones, and some other stuff. But like watches. But they're really close to the revenue of Amazon, who sells everything. That's pretty impressive. I just thought of that this morning. Let's see. For that period that would end in December, the street consensus for the fourth quarter is for revenue to jump to 119.7 billion. So we're going to see what happens with that. To be clear, this person expects results to crush consensus this quarter, even though everybody is kind of worried about what's going to happen. So, it's true. Ford is a tech company. Let's go to Amazon real quick. Amazon expects to post strong third quarter sales through a tight labor market that is driving up employee costs. And those driven up employee costs are expected to weigh on the bottom line. Sales growth has Expected to slow in the quarter due to supply chain issues, making it harder for demand. But what they have done, of course, last year, they did a lot of, actually in the last 2 or 3 years, they've done a lot of in-house shipping and whatnot. And it's actually helped them get through this tough period of shipments of trucks and trucks and ships and etc. So guys, smash the like button for me while I get through this story. The company said in July that it expects the third quarter sales between 106 and 112 billion dollars. Amazon has also seen strong demand for digital advertising business, which has increasingly competed with Google and Facebook. Amazon's tech peers showed robust earnings results this week. Listen to this. Microsoft, number 2 in the cloud behind Amazon, on Tuesday reported 48% jump in quarterly profit to $20.5 billion. Google nearly doubled its profit in the third quarter. Sheesh. Amazon held its annual Prime Day in the second quarter, so that's not going to fix into its third quarter results. They plan to hire about 275,000 permanent and seasonal employees, even with the tight labor market, averaging $18 per hour, many with $3,000 bonuses. And that's it. No employee. Oh, then there's union talk. I'm telling you right now, Amazon. I know you're not listening to me because I'm just some dingus, but don't go union. Let's go to Zuckerberg. So this is an interesting story. I've been thinking about this for many days. I'm very perplexed by Amazon. I'm sorry, Facebook. Everything they're doing seems to be right. The only thing that I worry about their issues with privacy and Apple that they're dealing with. I'm not worried that they're going to get kicked off of the Apple platform. I'm just worried about what's going to happen. That might force the stock down even lower. Now, here's the thing. When we talk about this metaverse, I went through this story and I'm going to read it to you, then I'm going to give my opinion. Mark Zuckerberg is expected Thursday to offer more detailed vision of the metaverse, an online virtual realm where people would work, play, and shop that he sees as key to the company attracting new young users. The company will do some kind of spin-off. They're going to call it, Facebook Reality Labs. That would take $10 million off of the operating profit. Now, here we go. There is Bank of America says, I don't want to read that part. Basically, I'm just going to tell you what it is. Okay, here's what they're going to do. They're going to create augmented reality. And what they're going to do is they expect this to happen sometime in the next decade. That, to me, is alarm number 1. Number 2, what it actually is, and from what I'm understanding and from what I'm seeing at Costco, is, where's the picture of it? There, so those things, okay, whatever. It's the goggles that you put on, and you have these things in your hands like this, and you create this augmented reality. Now, Samsung or Android or whoever the hell already does it, Facebook already does it. There's all these companies that already do it. I don't see that many of them out there. If you're Facebook, you're basically, what you're doing is you're saying over the next 10 years, you're hoping that something like this can become truth. Then you're going to go and have to sell this product to people to create this augmented reality, which they just came out with a partnership with Ray-Ban sunglasses. Those are $300 sunglasses. So I'm sure that this product that they're making is going to be $300 plus because it's goggles and some things that you throw on your hands. Oculus RV, that's what somebody was talking about, or VR. It gives me motion sickness, but whatever, doesn't matter. The point is, this is a long shot for me. I like Facebook for many other reasons. This thing doesn't get me too excited. He said we're building a lucrative platform that's going to be the foundation for the long road. Later in this decade, is when we would sort of expect this to be more of a real business story. Come on. I mean, and here's the Ray-Ban thing. $300 last month. Come on. Oculus Quest 2 headphones or headset. I don't know what you call them. Whatever. I'm going to read your comments right now. Facebook already makes augmented reality. They're called photo filters. Touche. How long has Oculus been around? It basically says a month here. Facebook launched a couple months. I don't know, but that's that. Let's go to Fed. So Fed leadership, just something that I think we should keep an eye on, even though we can't have no control over it. But The Fed is likely to detail at its meeting next week what they're going to do with winding down the $120 billion a month stimulus that they have been providing for over a year. And they're saying that it's going to end next June. Now, the president has not decided on if Jerome Powell's term will be extended after February when it expires. Typically, the president announces in the end of October, early November, when who the next Fed chair is going to be, because they have to be approved by the Senate committee, etc. So here I read the president's going on a 6-day trip to Europe, so he's not going to do it then. So I don't know who it's going to be. I have a feeling it's going to be Jerome Powell again. That's who the president has said he wants, and that's who Janet Yellen has said that she wants. But this Lyle Brainerd, she's a spender. She loves stimulus, but she's the one who is might be the front runner, especially with all the stuff that just went down with having to change the rules and such. So, okay, stagflation in China is a very real risk in the next couple of quarters, says analysts. So those of you that don't know what stagflation is basically when you have inflation increasing, runaway inflation as they call it, and wages or the economy or the GDP staying exactly the same. So it's not a good situation. Everything costs you more, but you're not making more. So that's what stagflation is. Last time it happened was the 70s here in the United States. So right now, prices are starting to accelerate quicker, and of course in China, their wages are not going up. A producer price index jumped 10.7% in September compared to a year earlier. They're cutting out power in many of the areas. Big banks plan to slash GDP growth for China. They are not planning on doing any stimulus like we do, so they're letting it fall as the chips may. I think we're going to be in a situation where there's a lot of factors weighing on economic growth and are not going away anytime soon, and we are probably not getting aggressive Chinese stimulus over the next few months. You know what? Good for China. Yellen and Powell literally slept together. Well, that's disgusting, but sure. All right, that's that. Let's see what the stock market is doing after that announcement of that whopping 2% GDP annualized growth in the third quarter. The market really doesn't care. 10-year yield, look at that drop. Almost 10 basis points. That's pretty big. What we have: Amazon, Apple, Starbucks. Today, guys, at 4 o'clock, turn on CNBC and start watching these talking goofballs on television start talking about Apple and Amazon countdown. They get the countdown on there. They get really serious. They get all of their head people on there, their head actors, and it's really funny. And then tomorrow, everything is pretty much before the bell, and everything is before the bell. Exxon, AbbVie, Royal Caribbean, Chevron, Phillips 66, Colgate. Yep. Okay. And if you want to join the software, be a part of our exclusive software that we created, you get the 8 pillars with it: retirement calculator, stock analyzer tool, 8-pillar portfolio. You get the exclusive content and so much more coming. Of course, you get news on our page. And if you want to join, you just click Join EM, roll right over here to the pages where you can sign up, and $28 a month gets you that. This is everythingmoney.com. $28 a month gets you access to the software, access to the community. If you want to join the Bid and Ask Nation with me, that we're going to do trading for about 13 minutes. $78 a month gets you that Employed Trader series. You get access to all of my Trading 101 videos, which is an entire training series to follow and learn all the rules that I teach. Seminars that I do all the time. I'm actually doing one next Saturday, the 6th, for Bid and Ask Nation members only. I'm going to teach a little bit for a lot of the new members that have come in, and then I'm going to open it up to Q&A, and I'll probably go for about 60 to 90 minutes on a Saturday. I give you my Saturdays. And Paul's Super Shorts, $500 an hour. If you're in the Bid and Ask, you get. If you're in Paul's Super Shorts, you get access to the Bid and Ask. Just a little more exclusive, about 40 people in there. If you want to do a one-on-one trading session with me, Zoom call, 1 hour Zoom call, $750. I did one yesterday with a gentleman named John, who was a friend of another one who did one. His name is David, and they were just phenomenal. John's going to do very, very well. And I don't think John would mind me saying this. The guy's 75 years old, and he's still active and still trading and wants to learn even at that age. So to me, That is very commendable. And the point is, if this is something that you guys want to do, this is a lifelong process. You can learn this and trade into your 70s, 80s, 90s, 120s, whatever you want to do. Trade it. And if you want to do a real estate deal with Paul, $10,000, 4 hours of his time, and you will not end up in a situation like China. So shoot me some stocks, smash the like button, and that's that. By the way, somebody just said I work on Saturday. No big deal. It's recorded because I am here to serve you. And that is that. Jimmy put out a video. I was just texting with Jimmy this morning. What are you teaching? What am I teaching? I'm going to teach about charts. I'm going to teach all the rules. Everything that I talk about on the show, if it's gibberish to you, I will teach it to you and understand it. We have a Trading 101 series. It's in the YouTube channel. It's a private chat. It's a private playlist, of course. And you get access to all of that. And I run through every single rule, and you will learn it that way. What else do we have? Twilio, massive gap down. I don't know what Twilio is. I like the Oculus thing. Facebook is transitioning from acquiring companies to spawning their already business. I like what Facebook's doing, but this whole whatever you call it, metaverse, I think it's stupid. All right, HD. To me, I compared it in the Bid and Ask Nation this morning to what 5G is. And I'm not saying 5G cell phone service. That's irrelevant. The way that they started to present 5G to us in 2015, 16, they were saying, it's going to be the greatest thing ever. It's going to replace Wi-Fi. It's going to go all over the world. There's a doctor in Cleveland that's going to be able to do surgery on somebody in California because 5G is going to be so fast and they can monitor their tools. You're full of it. 5G is a fallacy. Not going to happen. It's just stupid. We've been talking about this nonstop, and by the time 5G comes out, 6G is going to come out. Listen to this. I lived in Aruba for a year. They just when I got there in like 2017, they just started to get LTE. You're telling me that a place like Aruba, and that's not even that bad. Go to more remote places in the world. You're telling me that those places that barely have cell phone service, barely use 3G service, are going to get 5G service and are going to be able to keep up with the rest of the world? That's what they told us. Not true. Fake news. Done. Seen. All right. Home Depot. Home Depot. Listen, if you're in this thing and you want, and I would just stay in it. And if you get in an engulfing candlestick, it looks like you're up pre-market today. Stick with it. Great volume. Everything is looking really good with Home Depot. This is a really good looking stock. And they finally got a little bit of a breakout. Next. 5G only works if you have a 5G phone. It doesn't. Nicole has a 5G phone. My phone's as fast as hers. It's nothing. They probably put the 5G logo on there to make you feel good about yourself that you bought a new phone. Here's a little sweet spot reversal for Yum Brands. When is their earnings report? Oh, they reported yesterday? They reported today. Okay, so here's what you need to do today. Let it calm down a little bit and roll with it. See that this long wick that we had yesterday, that has to do with a lot of selling volume that just happened with earnings that were going to happen this morning. So see what happened. See what happens. See what happens tomorrow. See what happens tomorrow. See what happens tomorrow. Easy there. The Caribbean paradise. Might be a Caribbean paradise, but it ain't a cell phone paradise. I'll tell you that much right now. MRNA. Neither is Turks and Caicos. We own a house in Turks. You want to talk about cell phone service there? Mexico. You want to talk about cell phone service there? They ain't getting 5G. No surgeons are going to go there. And the way that they said it, it was going to be spread all over the world. Nothing annoys me more than the 5G talk. What the hell is this? Oh, Moderna. Okay. So Moderna, this was your quintessential flagpole pattern, pulled right back down on you because that's what they do. And then it consolidated a little bit and it fell even more because this was a straight flagpole. And flagpoles always fall apart and come back to normal. So it's consolidating again at the 100-day moving average. Volume is very, very, very declined. When do they report earnings? Let's see here. They report probably next week. Yep, they report next week. So we're going to keep watch on that. Let's see here. Yeah, this is looking pretty bad, to be honest with you. I wouldn't do anything with Moderna. I would just ignore it and go find something else. There's 10,000 stocks out there. Go find another one. All right. I'll do this Twilio thing. Whatever the hell this is. What's Twilio? All right. So this Twilio is What am I looking at here? Oh, you're looking at it because it's going to drop from $345 to $287 pre-market. So this is where it closed last night, and this is where it's going to open the morning. So to me, this is a complete ignore, except from a 15-minute perspective. Day traders, go and make some money on this thing today. Have at it and have a ball. Have I done Caterpillar yet? Nope. I need to wait, and I need to wait for everything to settle down today after earnings. All right, let's see MasterCard. So MasterCard, they're shooting up today, $10. So this might change the trend. I remember this was on the bid and ask watch list. Everything was okay. I was looking at it, and then this happened, this fall right here. So there's good reason. Now, what I would want to see, maybe today this jump up, maybe it doesn't. I don't know. Maybe this pulls this thing back up here. But to me right now, I would just avoid MasterCard and just relax with it. Boeing. You're welcome, Big Mac. All right, Boeing. So Boeing's certainly a downtrend. Did they report earnings? They reported yesterday. That's right. It was more trauma for them. So with Boeing, to me, what I would do here, and I think that you should put a tracker share on this. This is a good stock to hold because eventually Boeing is going to turn up. This thing could go down another $100 a share. Worst case scenario, you buy this for $206.80 today. Absolute worst case scenario, Boeing goes out of business and you lose $206.80. So the majority of people out there, it's going to be fine. The odds of that happening are very low. But the point is, you're going to see it in your brokerage account every single day, and eventually Boeing is going to make a run again. Look what Boeing was before the pandemic. They were up here in the, let's safely say they were up in this 400 range. This was a little absurd. It was overpriced, but Boeing's a good company. They've been abused for a very, very, very long time. They are going to be just fine in the long run. I mean, you have two places that you could buy airplanes from: Boeing, Airbus. If you want to buy American, it's Boeing. If you don't want to buy American, it's Airbus. You got no other choice. So it's not like one company is going to rule the market. Altria Group, what do we got here? So interesting looking trend developing on Altria Group, just having trouble breaking through its 200-day and 100-day moving average. What did they report? Oh, snap. Okay. I redact my previous statement. They reported this morning, something happened. They've dropped. They're going to open the morning down here in this 46 area. So I expect this trend to probably change on you. Now, if you're short, stick with your short and see what happens tomorrow. Let's say you open the day like this and you get an engulfing candlestick tomorrow. Short it. I mean, this is a really good looking trend to the downside. Really, really good. Your time frame on the left is 1 day and 1 week. No, that's not true. My time frame on both sides is, these are all daily candles, both sides. This is a weekly stochastic. This is a daily stochastic. That's my difference. But good question. Why not just add it to your watch list? Jeff, great question. I believe if I pull up a watch list for you, I have probably 50 stocks on my watch list. The odds of me catching something when it's on my watch list, it's going to get lost. I'm going to forget about it. It's going to get lost. If I buy a tracker share of it, I can actually put it in my portfolio and see it every single day, and I won't forget about it. And I'll probably check that chart every single day. So that's the idea behind a watch list. Guys, smash the like button. Let's get this thing to 200 before the show is over. Downturn on Best Buy. I don't think so. Let's pull up a line chart and just see. Okay, you're good. So what we're doing here, they had a big run up, a nice pullback here. So that kind of created a support level. Another run up. So I would hope that this is the end of whatever's happening with them, and they start to make this climb back up. I hope that this is a W formation that's just forming. You have a really nice trend going for you. All these 2 days right here, or 1 day for instance, all that is a snapback, just a minor snapback. No big deal. Keep watching it. Everything, to me, as of this point, is going to be fine. When do they report earnings? They report, oh yeah, you got a while. November 24th. So you got a while. So let's hope for this. I know this is on my watch list. Let's hope that it settles down today, doesn't really do anything, and then we just start to see this climb back up and break out over that 124 level. I mean, this is a really good looking stock. Hey, Nick, if you're watching this, can you just just tag me and just make sure this is in the watch list? And if it's not, go and put it in the watch list, please. If you have time. I know you're working. Smash the like, boys. Coco, OHI. Omega Health. So this is not good. I happen to be on the line chart here. You're just coming down with M formations down, meaning that there's a lot of resistance in there. You tried to make a climb and you fell right back down because it's just a complete flagpole pattern. So you're stuck below major moving averages. I would just throw this on a watch list, and I wouldn't really do anything with it. If you want to wait and get this thing to turn up for you, you can do something like that. November 4th is earnings. I think that's next Wednesday. Maybe it's Tuesday. I really don't know. What is the length of volume on my... it's whatever I make. It's 30 days. I'm sorry. It's 30 days. H&R Block, HRBZ. Ooh, they've been beaten down a little bit. What happened to them? I don't see any earnings that came out, so I don't know what happened. But H&R Block has fallen about $1.50, and look at that. Look at that, guys. It fell, and it just fell right on top of its 200-day moving average. Isn't it uncanny? It is uncanny. I'll answer the question for you. All right. And you know what else? It just stopped right here at this little area of support. It is uncanny. Now, if you get an engulfing candlestick down, your next area of support is just below $22. Then it's going to be below $20. So keep a watch on it. You're only about halfway through your weekly stochastic. So keep watching it. Keep rolling with it. I'm liking H&R Block right now from a short position, but you got to get through the 200-day moving average, meaning that there needs to be more selling volume. I don't know what the reason of this is, but if you can find out a reason, if it's a lot of negative pressure on the stock, that could work for you. Is T going to $20? Let's see. So T, to me, has hit pretty much a consolidation point. Let's see if we could just zoom. Yeah, all right. So it created a support level. And the fact that we are getting that little pop right there means, and this, by the way, stock market's open now. If we can get that little pop right there and stay up there, and I would really like to get this daily moving, to answer your question, I don't see anything that indicates it's going to go to $20. But there's nothing, if I zoom out this far, there's nothing in here that doesn't tell me it's going to go to $20. I'm just going based off of this support level that was created over here last week. And it seems like it's 2 weeks ago. It seems like it's fell back down to there and just hovered there. So I will do one more stock, then I'm going to get out of here. Who's going to be the lucky winner? AMCX. Zach, you get it. AMCX. AMCX has been abused lately. And this is an absolutely beautiful short position from a swing trading perspective. If you wanted to get in on this, you could have added. You had great selling volume coming in. Your stochastic was down. You had nice engulfing candlesticks in multiple places. This was a really nice trade if somebody caught the downside. Now, it seems like it's kind of sputtering out down here. And it looks like the trade may be over. And if I just zoom out and I zoom back to 2020, there's a support level created in there. So that might be what people are holding on to. We'll see. Keep watching it, guys. Keep watching it. But if I'm you, I'm more about this thing from a value perspective. I don't know what the cause of everything is today, but just keep watching it. Everything will be all right. I think AMCX is a pretty good value play from a long-term perspectivo. A little Spanish lingo for you there. So, all right, guys, that's it. A lot of recording today. 2 p.m. live stream for Everything Money software subscribers. To everybody, kind of that fireside chat. And I will see you guys back here in 23 and a half hours. Have a great day. Go make disruption.